Next company up, Sigma Lithium is a Canadian exploration and development company focused on developing its 100% owned Grota de Cirilo hard rock lithium project in Brazil, with the feasibility study stage project expected to start commissioning by the end of the year. The project hosts the largest hard rock lithium deposit in the Americas and potentially the world's fourth largest lithium mine. Phase 1 is fully funded for $111 million US and is targeting 220,000 tons of lithium spodumene concentrate annually, with 2 phases to follow. So phases 1, 2, and 3. Estimated production costs are $455 US per ton, which would make Sigma one of the world's lowest cost producers. And here to talk to us about it tonight is Jamie Flegg, and he's the Chief Development Officer at Sigma Lithium. Welcome, Jamie.
Thanks, Donald. Yeah, pleasure to be here.
Yeah, it's good to have you. So we've got brine lithium, now we've got hard rock lithium. So do you see yourselves as competitive or all working in the same industry, Jamie?
No, look, you know, I was actually down in Washington, D.C. Last week for the Benchmark Minerals conference, and you know, the takeaway there was, you know, I use their supply-demand forecast, but you can pretty much pick your supply-demand forecast, and there simply isn't enough lithium that's going to be coming out to meet the demand that's coming from electric vehicles. So we need all of the material that we can get, and that includes, you know, leveraging on new technologies like what Chris is doing at E3.
Okay, fantastic. Okay, so over to you. Tell us about Sigma.
Sure. So I trust everyone can see the presentation now, Donald.
Yep, absolutely. Off you go.
Yeah, great. So thanks again. Really happy to be here. Yeah, as Donald mentioned, I'm Chief Development Officer at Sigma. I actually just joined in March, and so still pretty fresh. But I think that's great because it allows me to convey to you folks some of the things that really excited me about the opportunity and what we feel is a really compelling and frankly still underappreciated story. And so let's get into it. I will be making forward-looking statements. This language and this presentation will be available on our website. And so just, I guess, kick off with the elevator pitch. As I kind of mentioned at the top, the lithium market is in a really interesting place right now because on one hand, you've got this tremendous demand growth, unprecedented really, which is coming from the world transitioning from fossil fuels to electric. But on the other hand, you have supply where, you know, car factories and battery factories and other widget factories can be built fairly quickly, right? But upstream in the sourcing raw materials, this is much more complex and takes a lot more time. And so we're seeing this situation where literally there's not enough supply to meet the demand that's coming from this energy transition. And as a result, what we're seeing is steadily increasing lithium prices, with most commentators projecting a supply-demand imbalance essentially to continue through the decade. And why I mention that right up front and why it's really important for the Sigma story is that we are uniquely positioned to capitalize on these market dynamics, being one of a small handful of development stage projects which will go into production in the next year. And so our Grota do Cirilo project in Brazil is fully funded and is currently in construction. And we expect to begin commissioning, to start commissioning at the end of the year to produce a high quality lithium concentrate product. And the project itself is world-class by pretty much any metric, but in terms of scale, we anticipate run rate capacity of over 530,000 tons per year of lithium concentrate. If you think in lithium carbonate equivalent terms, that's around 72,000 tons of LCE per year, which would put us among the top producers of lithium globally. And in terms of quality, the product that we produce is extremely high quality, and this is primarily due to 3 factors. We have one of the highest grade hard rock lithium deposits in the world. We have these very large and coarse spodumene crystals, and we have extremely low impurities. And we'll talk about it in a minute, but suffice to say that this very high quality product enables our offtake partners, or the folks that actually convert the concentrate to the hydroxide, which is used in batteries, to generate higher margins than they could comparable material. And the proof is in the pudding when you look at our our offtake partnership with global battery maker LG Energy. And finally, ESG, this company was actually founded as an ESG company and wanted to get into lithium to support the kind of EV revolution. And so ESG really drives all of the business decisions at the company and has since inception. On the world stage, our co-CEO, Anna, is a global thought leader on sustainability, attending United Nations dialogues, COP25, COP26, and right back to our local communities where we've provided a tremendous amount of support and have seen that reciprocated. And I think the attention that we've paid to this aspect of the business is the reason why we are currently in the position we are with a social license and an operating license and heading into production. Oops. So just quickly by the numbers. So in late May, we announced an updated technical report, which included our combined phase 1 and phase 2 economics. What it included essentially was an updated feasibility study for phase 1 and a pre-feasibility study for phase 2. And that report can be found on CEDAR or on our website, and I would encourage everyone to go and take a read. And obviously this was a big catalyst for us, and we were really excited to get these numbers out because clearly they're extremely robust. And so phase 1, which is currently in construction, has remaining capex of, it's under 111 now, call it between US 100 and 110 million dollars as we're spending as we speak, and will produce an after-tax combined NPV of around US 5.1 billion dollars and an IRR of almost 600%. With annual free cash flow of just shy of 600 million US dollars. And so, these are exceptional numbers. And look, what it really comes down to is 1, very low capital intensity, 2, this project is large scale, and 3, extremely favorable margins. And so when you look at our all-in cost per ton, including shipping to China of $455 per ton, you can pretty much pick your spodumene concentrate price, and this project will generate tremendous margins. For our study, we use a curve, which comes from Benchmark Minerals. We use the hydroxide forecast, and it shakes out to an average price of about just north of $2,000 per ton. And if you compare that to the current spot price of spodumene concentrate, depending on the source, we're seeing around $6,000, $6,500 per ton. And so, again, just pointing to the fact that we're in a very, very favorable position, expecting production early next year. And then finally, I would emphasize that these numbers are just for phase 1 and phase 2. And the most recent announcement we had was last week when we announced our maiden phase 3 resource, which added an additional 27 million tons at 1.5% lithium oxide grades, which increased our total resource to around 86 million tons, mostly in measured and indicated. And so the next big catalyst for us would be putting economics around phase 3, which would be incremental to these numbers, which we expect to do in Q3. Just quickly on the corporate structure, really strong balance sheet. We've got over 100 million US dollars of cash and no debt currently. And this is on the back of a $140 million equity financing we completed in December, which fully funded the phase 1 construction. On the shareholder register, I would note BlackRock is our second largest shareholder. They participated in that December financing. They wrote a $50 million US dollar check. They've actually been in since the IPO in 2018, and we're very close with them. They've done a tremendous amount of due diligence. And so we were really happy to see them come in a big way in December. Would also point out our largest shareholder, A10, who owns 48% of the company. A10 is an impact advisory private equity fund in Sao Paulo, Brazil, that is entirely made up of members of our management team and board. And so, in other words, management owns 48% of the company and is 100% aligned with all of the shareholders. And then finally, just pointing out, one of the things we've been working really hard on this year is getting out in marketing and increasing liquidity. And you can see the result of that effort in our share chart. Again, they hired me just in March to help with these initiatives. Historically, the company has been totally focused on executing at the project level, have done very little marketing historically. And so, we feel undervalued, and our view is that there's a lot of low-hanging fruit in the way of just starting to do events like this. We've been doing the conference circuit. We're starting to do more kicking off, retail marketing strategy, these types of things, which will hope to get the liquidity up, increase the breadth of buyer that can come into the stock, and hope that we make sure that we get the re-rate that we anticipate that we deserve as we move from developer to producer. So as mentioned earlier, the project itself is in Brazil, fantastic mining jurisdiction. We're in one of the largest mining provinces in the world, and the infrastructure to suit. And so access to a nearby port, access to water. The water we use is non-potable. We actually have to treat it before it goes into the plant, and we recycle almost all of it. So the project is almost water neutral. Excellent access to power, 100% renewable power in the form of hydroelectricity with transmission lines running to site. And in terms of access, the local town is a city of about 50,000 people. It's a 25-minute drive on paved road to site from the hotel you would stay at if you came to visit us. So just a really great place to be building a lithium operation. And this is what we're building. And I mentioned the phases earlier, so this is just a good visualization. So phase one is our Shusha deposit. This is currently in construction, fully funded. And again, our recently updated feasibility study shows annual production of 270,000 tons per year of our high quality lithium concentrate. Phase two is our Bahero deposit, and is anticipated to roughly double our annual production to just over 530,000 tons per year. And again, we just released a pre-feasibility study for phase two. The plan would be to begin construction on phase two essentially as soon as phase one is commissioned, and starting some of the early works on that build as early as later this year, with anticipated production from phase two coming in 2024. And then finally, phase three, which, as I mentioned, we were really excited to put out our updated resource on, which added 27 million tons of 1.5% material. So really excited to get this PEA out to continue to add to the growth profile of what is already a really robust project. And just to get you situated in terms of where we stack up. So on the left side, you see where we sit next to other lithium producers. The light green bar for us is our phase one, and the light gray bars are essentially this year's estimated production per Benchmark Minerals forecast. So, if we were at our run rate capacity this year, we'd be in, call it the top 5 producers globally of lithium. As everyone begins their expansions, which are shown in the dark gray bars, 2024 estimated production, our phase two expansion, which is in our dark green bar, keeps us among the top producers globally of lithium. So the point is, this is a globally relevant project that we're building. And the same holds true when you look on the right side of the page in terms of us next to the developers. There's only 3 projects that are going into production in the next year. It's ourselves, Core Lithium's underground hard rock mine in Australia, and Lithium America's Brine project in Argentina with Ganfeng. And so when you look at our production profile, our market cap, and our timeline to cash flow, we view that there's a disconnect in valuation, and that's before we would expect to see a re-rate once we have production. And this is the major catalyst, obviously. And so construction continues to progress really well. What you can see here on the photo is the foundations for the plant and equipment starting to go in. the run-of-mine pad and the foundations for the crusher. And so, as it says, we're about 24% of the way through construction. We have a much more fulsome construction update coming out shortly with some really good drone footage, et cetera. And we'll plan to continue to do monthly updates as we near commissioning. Next steps for the plant site, which is what you're seeing here, are finalizing the foundations and then actually putting up the plant equipment. So civil engineering and electromechanical work primarily. And then at the deposit, next steps are basically pre-stripping and then kicking off mining so that we have the feedstock to feed the plant once it's commissioned. As mentioned previously, the phase 1 capex is fully funded. Mostly through our cash balance, but also when you consider our project finance term sheet with SocGen, we have, call it US $110 million left to spend. And I think an important point here, because I anticipate getting the question. So these numbers are from the updated feasibility study that we announced about a month ago, and so are very recent. And I think that's important to note in what is now an inflationary environment, right? I get the question a lot. So what gives us comfort in these numbers and we are comfortable is the recency of these estimates, but also the fact that a lot of these quotes are deposits down and being spent as we speak. And so the combination of those things are what really gives us confidence in this number. And then I would just add, when you compare this CapEx number to our $5 billion NPV, and obviously the capital intensity is very favorable, and so this starts to let you wrap your head around the economics, 600% IRR and 3-month payback period at fairly conservative lithium prices. And this is a big reason why the economics are robust. So we have this very high quality material, and as mentioned at the top, we're sitting on one of the highest grade hard rock lithium deposits in the world, and it's got very, very low impurities. And these things are very, very important for lithium processing. And then combined with our large and coarse spodumene crystals, as I said, it actually allows our offtake partners to produce higher margins because it takes less of our product to produce a ton of hydroxide than it does similar material. And so another offset or outcome rather of the quality of our deposits is that it enables us to use a very straightforward processing flow sheet. So just by crushing and using dense media separation and a little bit of separation, we can generate 60 to 65% recoveries, and that's before having to use any sort of flotation. And so as a result, obviously this leads to lower operating costs, but it also enables us to not have to use any harsh chemicals, and it allows us to use 100% dry stack tailings. And so this has material positive environmental implications for us. And again, this was as I mentioned in the highlights, that this is a key kind of part of our business, is being mindful of the environment in our local communities, but also in Brazil, which has had a history of challenges with tailings dams. This was huge in us getting our social license and operating license. And so again, just to summarize the phase 1 and 2 economics, I would encourage everyone, especially those who are more technical, to hop on CDAR and review the technical report, which is filed. But the salient points here are extremely robust economics at our $2,200 per ton average lithium price, which again is based on a curve, so it's higher in the early years and lower in the later years. A payback period of just 3 months. And these are a result of all the project characteristics we've discussed so far. And again, just for phase 1 and 2. And so really looking forward to the phase 3 PEA, which should come out in Q3. Would also just note here, as we look to expand into our phase 2 project, relatively low capex for that build as well of $76 million US. And that is primarily the result of And just go to the next slide. So some of the early works has already been done for the phase 2 build as part of the phase 1 capex. And essentially the phase 2 build is just a parallel line in the plant. So we'll also have the benefit of having already gone through the phase 1 build in terms of execution on phase 2. And again, this photo should help you to visualize what we're actually building. And you can kind of superimpose this on top of the construction update photo. Again, just highlighting our fairly straightforward and highly mechanical process. Am I running out of time, Donald?
You are indeed. one or 2 minutes. Thank you.
Okay, that works for me. So let's finish up on upside. So as I mentioned earlier, this company has been run essentially like a private equity asset, totally focused on getting into production. But we have a very large land package. It's over 19,000 hectares, and there's 9 known past producing lithium mines on the property. Only 4 of those have been incorporated in our current resource. And the phase 3 resource that we just came out isn't included in that. So there's a tremendous amount of exploration potential which is yet to be explored. And this is, it's already started to bear fruit when you consider the phase 3 resource we just put out, which was our NDC deposit, which we discovered between 2 of the past producing mines. And so, would just underscore that. So these 2, on the right-hand side, I guess you can't see my cursor, but the 2 phase 3 boxes on the right-hand side of the screen are 2 of the past producing mines. Those are currently incorporated in the resource already small. But as we continued to drill that gap zone NDC, it became evident that that was the obvious actual phase 3. And so these 2 other past producing mines are now being contemplated as a phase 4. At some point, we'll cut off the phases and we'll just continue to add to mine life. But when you talk to the folks on site, the view is that this is a generational project. We just have to do the work to go and drill out the large land package. And then finally, because Donald's going to yank me here, but again, huge focus on ESG. And I think, really important part of the story, because the work that Anna has done over the past 10 years, not only globally, but locally, in terms of providing jobs for the local folks, providing education for local folks to join the workforce, daycare centers, so single parents can come to work. Huge impact during COVID, providing food, water, medical supplies. Really strong attention paid to supporting our local communities, and in reciprocity, they've showed a tremendous amount of support for us. They really want this built, and again, that's the reason why we are where we are today. So I can park it there, Donald, if you want to open up to questions.
Great. Okay, let's jump in quickly by tell us when you think mining will commence at the mine.
Yeah, so commissioning at the plant will begin end of year. We would expect to have first production, call it late Q1, early Q2.
And will you ramp that early production up? You talked 270,000 tons of spodumene. How long does it take you to get to that number?
Yeah, it's a fairly quick ramp because of the pretty straightforward and highly mechanical process that I referenced earlier. So it's not like a typical, certainly nothing like a brine, and even not like a typical hard rock deposit, which would have flotation tanks. We would anticipate being able to ramp up to full. I think the commissioning timeline is 3 months, and then we would anticipate ramping up to full production capacity fairly quickly thereafter. Okay.
Talk us through the offtake agreements you signed. I believe you've got 2 of them, one with LG Energy, one with Mitsui. How much are they for? Do they take the whole of the 270,000 tons? Talk us through those.
Yeah, so our agreement with LG Energy is essentially it's a term sheet. We're working on definitive agreement. They have access to 60,000 tons of our phase 1 and 40,000 tons of our phase 2, so 100,000 tons total. we have the option to increase that to 150,000 tons. The way the pricing will work, and again, is discussions are ongoing, but what we have said is it will essentially track the floating hydroxide price based on an agreed platform, call it LME Fast Markets, and then we'll attribute a percentage to that, which is reflective of the current delta between hydroxide and spodumene concentrate price, which is currently around 9%, and that's the percentage we used in the technical report for our price assumptions.
And can I be cheeky and ask you how much you expect to get for your offtake agreement price? How much are they talking about?
Yeah, we're working on it.
Commercially sensitive.
Well, sorry, the hydroxide price it'll track floating hydroxide prices, but then
what do you expect that to be then?
Oh goodness, I don't know.
Sorry, hard question.
What's it today? 75,000 per ton or something like that. I don't know.
Do you expect it to continue at 75,000 a ton?
Yeah, look, if I had a crystal ball, life would be easier. But look, I think again, I just sat in a lithium conference in Washington, and it's very clear that the downstream is hungry and can move quickly and is moving quickly, and the upstream, who must provide the units for the downstream to flow, is the mining chemicals business and is slow moving. And so there's an obvious discrepancy there. And if that holds, I don't see any reason why prices would decrease.
Okay. You mentioned that, was it 3 other significant lithium mines are coming into production globally in 2023? Will this be a catalyst when you come online? Will that be a catalyst for the share price, do you think?
Oh yeah, I mean, yeah, absolutely. So I think that's our biggest catalyst. Again, we feel that we trade at a discount to our developer peers. And you can argue the reason why. Again, our view is that we just haven't done the work to market the company. We have very low liquidity, even with the increased liquidity that we've seen, having done the work in the first part of the year. But once we actually get into production and start realizing the cash flows that this project should realize, it will become undeniable. And once the street starts to look at us on cash flow metrics, is when we start to look really, really cheap. And I think that is when the rubber will hit the road. And yes, we would anticipate a strong re-rate on the back of that achievement.
So you told us that the management hold 48% of the shares. How much of a free float is there? Is it the rest of that? I mean, BlackRock sound as though they're in for the long haul. So how much is available to retail?
Yeah, look, it's probably somewhere between 30 and 50% float, depending on what you include in the kind of sticky hands. BlackRock owns, I think, 6 or 7%, and then there's some large high net worth and family offices that have been in since the very beginning and are very supportive. Some of those you would think would start to turn over. They've done tremendously well. I think we IPO'd at $2 in 2018. And so look, but for retail on the Nasdaq, for example, there's plenty of liquidity. We've got the thing now trading around $8 million US per day. And so, check out the Nasdaq listing. Again, for retail specifically, there should be plenty of liquidity. The challenge with liquidity is getting more of the institutions to be able to build the positions they need to enter the story, because we don't have, near-term financing plans. And so we got to get the liquidity up so those folks can come in and buy.
Okay, good answer. Thank you. Pete Higgins, he goes through the lithium resource numbers, and then he says, how much bigger does the team think the minerals resource could be?
Yeah, I mean, that's a forward-looking question, which begs a forward-looking, I guess, answer. But again, when you talk to the folks on site, it's like the assumption is this is a generational asset. There's lots and lots of lithium. We've only incorporated 4 of the 9 past producing mines into the resource. And that was when we narrowed the 30 targets down to 10 based on the 200 known pegmatite occurrences on the property. And so we just, it's hard for me to give an exact answer. Like we see this easily going through 100 million tons again, very forward-looking statement. But we just have to go out and spend the time and money to do that drilling work to get the resource up.
Okay, final question. You'll be delighted to hear a final question. I'm letting you off the hook. Josh Cole asks, or maybe not an easy one, can you speak on the conditions in Brazil, Bolsonaro right now? Seems like there's some serious geopolitical worries related to Bolsonaro's mining policies as of late. So what are Bolsonaro's mining policies and why are they troubling?
Yeah, look, I won't speak specifically to the politics, but I will say that so far, and I come from a private equity background where we were very conservative in terms of the jurisdictions that we would invest in, basically just Canada and the US. And so that was probably the number one consideration for me coming to Brazil. And so far in these first 4 months, I've been tremendously impressed. Huge amount of support from both the local communities, the local governments, state, and kind of all levels of government. I think partially that's due to the work that the Sigma team has done over the past 10 years, being in Brasilia, being in Belo Horizonte, building the relationships, building the project in the right way in terms of making it environmentally friendly and sustainable for the local communities. And so we've seen a tremendous amount of support. It's not something that keeps me up at night.
Jamie Flegg, I'm so sorry, I'm going to have to cut you off in your prime. That was terrific. What an amazing project. I think you will have no problems in Brasilia and Belo Horizonte. You're going to have a ball, thoroughly enjoy yourself.